It's so great to be in Singapore. One of the previous speakers was talking about all the world's economic policies, the distress it's causing. It's nice to be in a country that proves that rational policy works. And we have so many investments in Singapore. Outside the United States, it's our biggest country. We have 13 investments like Amber here in Sing. So economic policy is really having a massive impact on the world. And the Federal Reserve Chairman said there's no precedent for what's happening right now. I would say it's called the 70s. Basically, all of the stats, inflation, everything, unemployment, all that stuff is exactly like the 70s. We even have an oil crisis, and just like the 70s, we have a Soviet invasion of another country. The only thing that's totally different from the 70s is back in the day, the Fed used to fight inflation. This time they've let inflation rage to a point where inflation got to be 11% above the Fed funds rate, if you count inflation the correct way with housing using the Case-Shiller index. Even in the 70s, the Fed never let it get past about 5%. So the Fed's made an obvious mistake keeping the rates way too low for way too long. They're really starting to realize that, but their second policy mistake is not something they've addressed yet. The Fed bought so many bonds, they drove the real rate of return of a 10-year note to 6% negative. And obviously, no rational investor is going to buy a security that guarantees them to lose 6% every year for 10 years. The way they did that is the Fed, which never used to buy bonds, they only used to influence the short-term rate, went in and purchased $6 trillion of bonds. And to put that in perspective, that is 200% of all mortgage lending in the United States for 2020 and 21. So not only did the Fed lend to every single American that bought a house, they did 100% more than that. And they got the rates down 700 basis points through its 50-year average. That created a bubble in bonds of epic proportion. The top graph there is the value of the US government and mortgage market relative to its 50-year real rate average. The Fed literally drove it $15 trillion above its fair market value. And December 4th, we sent out our investor letter calling out this bond bubble and said it would pop when interest rates were 1.3 on the 10-year note, and we said it would go to 5%. The bottom is the graph of what's actually happening. It really is, for better or worse, on pace. And I think that has to inform your investing these days. There's no working age person that's ever invested in a rising rate environment. That's a massively important thing. I think all of us have a failure of imagination because we've never seen a rising rate environment. I'm 57 and I got to Wall Street 6 years into the rally in bonds. I think we're gonna have multi-year period of rising rates to rates that are so different than everyone's talking about. Wall Street forecasts keep going, oh, it's gonna go to 2% or 3% or now 4%. I think it's easily going to 5% Fed funds, 5% 10-year note, and maybe way higher. I mean, it's gonna take a lot to actually slow this down. Previous speaker was talking about how crypto is now a risk asset. I think that's temporary. I've definitely been wrong in the last 6 months. In the first 10 years of crypto, it was uncorrelated with risk assets. It's been very correlated for the last 6 months. I think that's gonna break down, and it's a great place to hide because if I'm right and bond rates do go up, obviously that has to hurt bond prices because that's mathematical, but I think it also has to impact other things that have discounted cash flows like equities, real estate. Crypto has no cash flows. Crypto's like gold or soft commodities. It could easily rally. So I'm wildly bullish on crypto, even though I'm bearish on risk assets. So how do you navigate these markets? Human nature is very pro-cyclical. We've been doing this for 10 years. We get massive inflows at the highs. And in times like right now, when it's a great time to buy, it's kind of crickets chirping. Nobody wants to invest. But now is actually the best time to invest. For example, our last venture fund, we raised it in 2017, and we're able to put the money to work in the last crypto winter, 2018-19. And that's a great time to invest because all of the kind of generalist VCs, the big growth stage investors, they all vanish in times like right now. And it leaves just a handful of very dedicated crypto-focused firms to be able to take huge advantage. You get enormous alpha because there's very little competition, for the deals out there. The deals that we're seeing right now are just like that. 6-9 months ago, valuations were crazy. There were big growth stage firms literally doing one deal every business day. And so it's really hard to compete, and do good deals in an environment like that. But now all those firms have left the space, and firms that are dedicated to the space have much more alpha. So one analog I want to share is there's such a focus on Bitcoin and now a bit Ethereum, but there's so much more out there to invest in. And the analog I like to use is in the late 90s, Microsoft was almost everything in tech. It was like 90% of the market cap. And over the next 2 decades, Microsoft did well. It went up 10x, which that'd be an amazing investment. I'd love to invest in things that go up 10x. But almost all of the gains in the tech space came from things that were not Microsoft, Amazon, Apple, Google. And I think that's what we've got going in our space. For a long time, Bitcoin's literally everything. And then, there was a long period of time I'd tell friends, hey, just, half your money in Ethereum, half your money in Bitcoin, and you're fine. But now there's so many important projects. And just yesterday, the market cap of the stuff that's not Bitcoin or Ethereum hit 44%. So we're almost to a point where half of the entire market are things that aren't the 2 main blockchains. And I'm wildly bullish on Bitcoin and Ethereum, but I just think these other projects are going to perform even better and should be in somebody's portfolio. So I want to review a little bit about what else there is to be investing in, because it really is an incredibly exciting time. And in these crypto winners, you get a lot of skeptics saying there's no use cases, nothing's really happening. So obviously, Bitcoin's great at storing wealth, it's great at moving money across borders. And then Ethereum is really good at smart contracts, but there's so many more use cases. We're really seeing a lot of very interesting applications of blockchain. I'll go through a couple later, but we're building a completely new financial infrastructure. And we're doing it at a time when the valuations are so low. And frankly, that's why I'm so bullish. The early days of Bitcoin, it was very cheap relative to where it could go or relative to gold. I think that's true of all the non-Bitcoin and Ethereum use cases now. So DeFi is a great example. There are dozens of really important projects in the DeFi space. And after this crash in the markets, all of them combined are only trading at 20 billion market cap. I think that's really crazy. The entire value of the traditional financial system is $3 trillion. And so while I wouldn't probably put all my life savings in DeFi, if it's less than 1% of the value of a parallel financial system that it's highly likely to compete with, highly likely to disrupt, that just seems like a great trade. So you should have some of your portfolio in DeFi. And the really fun part about our industry now is it's very investable. There's so many projects. You don't have to put all your eggs in one basket. You can invest, create a portfolio that has a tremendous amount of diversity and value. So I think Web3 is the most inevitable trade I've ever seen. And we might be too early, and we might invest in things, and they run out of money, and it takes 20 years or whatever. So, I'm not saying it's going to happen overnight. But Web3 is such an obvious trade. So the existing internet's all about extracting value out of you. You're Facebook's customer. You're the one getting up every day, spending 50 minutes, producing content for Mark Zuckerberg, and he's sucking all of the value out of it. There's also some pretty, sketchy governance issues with a lot of the big tech companies. Some of their policies, could be questioned. So I'm really excited for a future world where the people that create all the value, the people that contribute to the value of all these networks actually own their own data. It's an incredible new world. And I think if you think about it, all the web projects that we use and we like, almost all of them can be done on a decentralized version. Great examples, music sharing, right? Spotify, all these entities suck an enormous amount of value out of the system, and the artist gets, a very little minority of the value of what they create. And then obviously the fans pay a lot of money and they don't get any value for all the curation they're doing, all that. If you do things in a decentralized way, you can have the people that create all the value, both the artists and then the consumer, the little kid on his phone finding a great new band, that has value. They get paid part of the value of the network. And so we're invested in a project called Audius that does that. Another great example is search and browsers. Google's business model is wild. Every millisecond, they auction your private data to people. And they used to actually read all your emails. They don't do that anymore. But it's a really sketchy business model. Whereas Brave Browser keeps all your data on your own device. And if you're willing to watch ads, you get paid in cryptocurrency. And so you're essentially auctioning your own attention. And they have 50 million active users now. So these Web3 projects are actually starting to work. The next frontier, NFTs, gaming, the Metaverse, super exciting. And one of the reasons I love that so much, it's bringing a whole new cohort of people into blockchain. The early days, all, cypherpunks that were super into the technology and all that. Some libertarians, got it going early. But this is just fun. NFTs are fun. So it's bringing in a whole new raft of people. It's bringing in big brands. It's going to force a lot of people to engage blockchain. And once, you're into it, then you're going to realize, smart contracts are important or Web3 or whatever, and it's going to bring more people into our ecosystem. And the other thing to think about is there's so many potential important projects out there. I think a lot of the people in our space get almost religious about it. They're either Bitcoin maximalists or they're, super passionate about Solana or whatever. There's not one internet company, right? There's 25 important things. And I think that's the way, blockchain will end up. There's going to be probably a single digit number of very important layer ones, and then, a lot of different layer twos that are, very important for the functioning, of the network. So an analog that I like right now, everyone's bummed about the industry and, it feels down, because we're in a bear market. But I think the analog that works is going back to the internet, the .com. And the internet analog is often overused, but since blockchain is really the final piece of the protocol puzzle that is the internet, this is relevant. So the internet had a lot of promise, a lot of things were tried, pets.com, all that stuff. And there was a huge hype and a bubble pop in 2000, March of 2000. It took a couple years actually to wash all that out and start building the real companies. And the analog I would say is it's kind of like 2003 in the .com era. Obviously, the internet had a paradigm shift. It's going to be very important. It's going to do a lot of things. I think blockchain is equally important, and it really is, essentially part of the internet. Decentralization is a massive concept. It's not only important just in blockchain itself, but in governance, voting rights. There's a lot of really important things that'll come out of decentralization. So Web 2 had some important companies, Apple, Microsoft, all that, but not all the important tech was invented by 2002. There was obviously a bubble, excessive speculation, all that. We're seeing that here. There was a lot of projects that raised a lot of money with almost no information, a lot of speculation on NFTs, things like that. But that was actually the time to invest. And if you think back to what happened in the post.com bubble, so many of the most important companies that we know now were created after that, right? That wasn't the end of anything. That was really the beginning. So you get Facebook, Twitter, the iPhone, Netflix, all that stuff, happened, after the crash of tech. And I think we're in that space right now. And so we're very excited. We had just raised our latest fund. And so we're now very aggressively going out there, both trying to find new companies that are at great valuations, but also, looking at deals that maybe we missed, back in the day. They're coming back at, better prices. And then I think over the next 3 or 4 years, you're going to see a whole raft of, really brilliant innovators coming from traditional finance to set up blockchain companies. So a lot of our best investments are companies that have only been started in the last few years. So to wrap it up, I wanted to share that I've been through 3 massive bear markets in 10 years, and I gotta admit, in the first few of those, I was really sweating, and I was like, I don't know if blockchain is gonna work. Maybe the government's gonna outlaw it. Maybe something really bad happens. This cycle is totally different. The fundamentals are so strong. There's 200 million people using blockchain already. The only thing you need to interact with blockchain is a smartphone, and there's 4 billion people that have one of those. So I think it's within only like 3 or 4 years that we're going to have 1 billion people using blockchain. When you have 1 billion people using something, supply and demand works, and the value has to go up. You're also seeing government buy-in. 6, 8 years ago, it was a real risk that the G7 would outlaw Bitcoin or something like that. China already has more people using their government blockchain than all the other blockchains combined. And so if you're a regulator, no matter what your view is on blockchain, maybe you don't like it, maybe you're skeptical, it doesn't matter. The toothpaste is already out of the tube. Governments have to get engaged. And so governments like the US are building blockchains. Everyone has to get into that. And it really is a national competition. Most countries have been neutral to blockchain. There's a few that have been negative. And even the US, the SEC has been slow, but they have to get engaged, because if they don't do it, it'll happen somewhere else. And then the last big point is this crisis we had over the last 4 or 5 months, where some lenders went under, got kind of a bad rap. All the really negative skeptics said, oh, DeFi blew up, it didn't work. The truth is really the polar opposite. DeFi worked great. DeFi functioned 24/7, executing smart contracts exactly as the 2 participants had agreed. It's centralized finance that had the problem. So all the names you hear of companies that went broke, they're just old school banks. They're taking money in, lending it out, doing what banks used to do in the old days, take it in with overnight deposits, but lend it out, long term, or lock it up in staked ETH or in, grayscale arbitrage. And so all the failures in our space were just old school, excessive leverage type failures. And all the protocols like Aave, Maker, Compound, they just executed day in and day out. And so I think when we look back a few years from now, we're going to realize this era was really what proved that DeFi works. And so, it might give regulators a little more pause, but I think it is, it's a great sign for our industry. And then lastly, I just want to conclude that I think that the reason I'm all in on this space is I've been a global macro style investor for 35 years, looking for things that are asymmetric, things where the upside, is much more than the downside. And I think over the next 10 or 20 years, there's literally no other asset on earth that is as compelling as blockchain. And it might be a couple years of a bear market or whatever. It might, I'm not promising things will go up today, but it is the most disruptive thing since, the other half of the internet. And with that, we're going to improve the lives of billions of people and, have a huge positive impact. And so that's why I've been so psyched to be in this industry. Thanks very much.